Multiple indicator trading signals are used to follow uptrends or downtrends and confirm price movements by identifying their momentum tendency to keep on rising or falling. Commodity channel index and simple moving average trading signals occur when there is a crossover among stock close prices and their simple moving average, which is confirmed by commodity channel index being at an overbought or oversold area. Therefore, we have price crossover and bands crossover confirmation type of trading signals, in which we have a stock overbought if the commodity channel index is above plus 100 and the stock is oversold if the commodity channel index is below minus 100. Therefore, we have a buy signal if the previous close price was less than the simple moving average and then the current close price is greater than the simple moving average, and this is confirmed by the commodity channel index being below minus 100. On the other hand, we have a sell signal if the previous close price was greater than the simple moving average and then the current close price is less than the simple moving average and the commodity channel index is above plus 100. Rate of change and simple moving average trading signals occur when there is a crossover among stock close prices and their simple moving average, which is confirmed by rate of change indicator being at an overbought or oversold area. Therefore, we have price crossover and bands crossover confirmation type of trading signals, in which the stock is overbought if our rate of change is greater than plus 5, and the stock is considered oversold if the rate of change is less than minus 5. Therefore, we have a buy signal if the previous close price was less than the simple moving average, and then the current close price is greater than the simple moving average, and this is confirmed by the rate of change being below minus 5. On the other hand, we have a sell signal if the previous close price was greater than the simple moving average and then the current close price was less than the simple moving average, and this is confirmed by the rate of change being above plus 5. Great, so let's go back into our Python PyCharm IDE so that we can study simple moving average together with commodity channel index and rate of change trading signals with greater detail. Excellent, so here we are back within our Python PyCharm IDE. In this lecture, we'll be working within SMA and CCI and SMA and ROC code files. If you have any questions about their setup, please go back to section 1, Stock Technical Analysis Data lecture, where all of that explained with greater detail. So let's begin with SMA and CCI. As they are meant to be standalone type of files, first we import our packages, then we read our data as default. Next, we calculate our corresponding technical indicators, which in this case is our 5-day simple moving average and our commodity channel index, both with those parameters of 5 days for the simple moving average and 20 days for the commodity channel index. Again, these are commonly used, but you can modify them according to your needs. Then we do the corresponding chart of these two, and then we proceed to do our price and bands crossover type of trading signals. First of all, we need to calculate previous periods data so that we avoid backtesting bias. This means that we'll implement our trading signals 1 day later than observed. Therefore, we create previous periods close, previous periods simple moving average, previous periods commodity channel index, and second previous periods close and simple moving average. The reason we're only creating previous periods commodity channel index is that it's only used to confirm the signal. This is done by going into our original data frame, searching for the original column and shifting it either 1 or 2 positions accordingly. Then we generate our trading signals: buy equals 1, sell minus 1, do nothing equals 0. We create a column, in this case it's going to be named CCI SMA SIG, and we initialize it with 0, where we are going to store all those corresponding trading signals. Then we create an associated variable with that same name, which is equal to 0, and we are going to use it within our for loop. For I, R in enumerate spy.iterRows, meaning that it's going to iterate through all the rows within our data frame, and it's going to ask the following conditionals. First, if our second previous close price was less than that second previous simple moving average, and that previous close price was greater than that previous period simple moving average, and this is confirmed by our previous period's commodity channel index being below minus 100, then our signal variable turns into 1, which is a buy signal. If not, we enter a second if, which is a nested if within the original one, therefore it's an elif, in which we're asking if our second previous period's close price was greater than that second previous period's simple moving average, and our previous period's close price was less than that previous period's simple moving average, and this is confirmed by our previous period's commodity channel index being above 100, then our signal is -1 or a sell signal. If none of these two conditions is met, then we have 0, which is do nothing. In all the cases throughout the for loop and all the corresponding rows, we are going to be substituting them within our original data frame at ilog, I the row, 13 the column where we created just above, with the variable we are calculating within our for loop. Once we have that, we can proceed to do our trading signals chart. For this, we created fig2, ax for axis equals plt.subplots. 3 of them we share our x-axis as true. Then we have at the 0th position our corresponding close prices, their overlay, which is the 5-day simple moving average, and the legend located at the upper left. On the second of our charts, we have right over here at position 1 our corresponding oscillator, which is the commodity channel index colored in green to differentiate from the ones above, and then we have the corresponding horizontal lines at 100 and -100 with their line style dashed and colored in red to show the corresponding thresholds for overbought and oversold. We locate the legend at the upper left as well. And finally, we have the third chart at that second position, which is our corresponding signals. And we have the marker O, which is a dotted type of market, line style equals blank, so there's no lines connecting the dots. The legend is located at the upper left, and then we have the corresponding superior title for the subplots, which is SPY close prices, simple moving average, SMA of 5 days, and commodity channel index with its characteristics of 20 days and the constant term of 0.015. And then we show the chart. As always, it's important to remember that the characteristics of the thresholds as well as the parameters of our technical indicators are one which are commonly used, but you can modify them according to your needs. Excellent. So let's run the code by clicking the right button on the mouse and scrolling down to run SMA and CCI or commodity channel index right over here. Excellent. So it's going to begin running the code. First of all, we'll visualize our chart, which includes our prices with their corresponding overlay, and below we have the corresponding oscillator. So let's close this chart and let's study the one we just created. So first of all, we're going to make it a full screen. This needs to be done manually because of the screencast, so we do it right here, all the way into the end, and also all the way into the bottom. Perfect. So here we have SPY close prices, simple moving average SMA 5, and commodity channel index CCI for 20 days and the corresponding constant term, which is 0.015. Top chart is our close prices in a solid blue line, and then the overlay, which is our 5-day simple moving average in orange. Next we have our oscillator, which is the commodity channel index with corresponding thresholds, and finally we have our corresponding signals. 1 is buy, 0 do nothing, -1 is sell. The 3 charts share the horizontal axis, which are our dates, beginning from that beginning of 2016 all the way to the beginning of 2017. So let's focus on some of the signals. For this, we're going to zoom in right here into this part where we have 2 of them. So we select this area of our charts and we are zooming in. So as mentioned, whenever we had our corresponding close prices going from above to below the corresponding overlay, or in this case our simple moving average of 5 days, and this is confirmed by our commodity channel index being above the upper threshold right over here, signaling an overbought signal, then we sell, which is implemented later on. Then, on the other hand, when we have the opposite, which is our corresponding close prices going from below to above our corresponding technical indicator, which is our simple moving average, and this is confirmed right here with our CCI being below the lower threshold, therefore meaning that it is oversold, then we have a buy signal like this one right over here. As always, it's important to remember that if you look in the bottom left-hand corner here and you use the cursor on your mouse, you'll see the precise value of the chart. So we can zoom back with this, and then we close this chart, the second and third ones as well. Excellent. So now let's go into our SMA and ROC, or rate of change, right over here, the second of our multiple indicator-based trading signals. So As always, we have standalone type of files, therefore we import packages. Next, we continue with our corresponding data reading. The next part is to calculate our technical indicators, 5-day simple moving average and 21 days rate of change. Again, these ones are commonly used, but you can modify them according to your needs. Then we have the chart, and next part is we are going to calculate our price and bands crossover type of trading signals. For this, we're going to calculate previous periods data to avoid backtesting bias. Next, we're going to generate our trading signals. In this case, buy 1, sell -1, do nothing with 0. We generate the column where we're going to store them. Also the variable, which we're going to modify within our for loop. In our for loop, we're going to ask if our second previous period's close price was less than that second previous period simple moving average, and then previous period's close price was greater than previous period simple moving average, and this is confirmed by previous period's rate of change being below -5, then we have signal equals 1 or a buy signal. If not, we enter a second if conditional, which is nested within the original, and we're asking if our second previous period's close price was greater than the second previous period simple moving average, and then previous period's close price was less than previous period's simple moving average, and this is confirmed by our previous period's rate of change being above 5, then -1, which is a sell signal. If none of these two conditions is met, we have 0, which is do nothing, and we update in each of these for loops the corresponding original data frame. Then we proceed to do our trading signals chart, which again, we have 3 subplots that share the x-axis. On the first one, close prices and the moving average, with a legend located at the upper left. Then we have at the middle chart, we have our rate of change oscillator, colored in green to differentiate from the one above, also with the 2 horizontal thresholds at 5 and -5 with their corresponding dashed line style and colored in red. Again, these are commonly used, but you can also modify them according to your needs. Then you have the legend located at the upper left. Then we have the corresponding signals as dots with their line style blank so that there's no lines connecting the dots. And then we have the corresponding title of this chart, SPY close prices, simple moving average 5 days and rate of change 21 days. So let's proceed to run the code by clicking the right button on the mouse and scrolling down into run SMA and ROC or rate of change. Excellent, so this is the first of our charts in which we have in the upper part our close prices together with their overlay or simple moving average, and then below we have the oscillator as our rate of change. So we are going to close this chart and we're going to focus on the one we just created. So let's make it a full screen, but needs to be done manually because of the screencast right over here, all the way into the end and also all the way into the bottom. Perfect, so here we have our SPY close prices, simple moving average SMA 5 and rate of change ROC of 21 days. Top chart is our close prices together with their overlay as the technical indicator simple moving average of 5 days in orange. Then we have the middle chart with our corresponding oscillator, rate of change, and corresponding thresholds for overbought and oversold areas. Then we have our corresponding signals. 0 do nothing, -1 is sell. We don't have any buys in this strategy, which would have been 1. Then they all share the horizontal axis, which is our dates from the beginning of 2016 to the beginning of 2017. So let's focus on the trading signals we do have right over here. So we're going to just zoom in into this part, and as you might remember, right over here where we have our signals, whenever our close prices crossed from above to below the simple moving average, which in this case is a 5-day one, and this is confirmed by our rate of change being above 5, which means that we are at an overbought area, then we have a sell signal like this one right over here. Excellent. As always, if you focus on the bottom left hand corner here and the cursor of your mouse, you see the precise value within the charts. Here we scroll back to zoom out and we close this chart. We also close the next one and the final one. Excellent. So with this, we finished the first 2 of our multiple indicator trading strategies, but we still need to study the rest of our multiple indicator-based trading strategies, the ones related to our SMA together with relative strength index, stochastic oscillator, and with Williams percentage R, which will be our following objectives.